We were talking about Alphabet numbers, more than doubling its quarterly profit to $18.5 billion. The shares trading higher here this morning by nearly 3%. Joining us now for more perspective, Managing Director at Mizuho Securities, James Lee. James, thanks for being with us. So the numbers looked good pretty much across the board. Your note in reaction is positive as well. Anything to be worried about at Alphabet? Is it just like across the board great?
Yeah, the company is certainly firing on all cylinders here. Number one, we saw a very strong recovery in online advertising, especially coming from retail, financial services, and travel verticals. And in search, they saw a meaningful increase in omni-channel activity, especially come from retail store. One of the largest clients they have, Bed Bath & Beyond, was able to fulfill about a third of their orders, online orders, from its stores. And also on YouTube, they saw a meaningful shift in terms of ad spending from TV advertising. They indicated that on a recent study that 70% of the YouTube audience is not reachable by TV. I think the strength in advertising is probably less surprising. I think what's the biggest surprise for the quarter, in my view, is the strength in cloud that accelerated about 8 points to 54% year-over-year growth. They saw a lot of demand coming from enterprises because of growing supply on structured data, which require a machine learning AI to manage those data sets. And also at the same time, they saw telecom industry upgrading their network because of 5G. So from that perspective, the strength in cloud is very meaningful here.
James, I continue to focus a good bit on the other bets segment for Alphabet. So that lost again. I guess it wasn't expected to be profitable. Lost $1.4 billion. What is in that segment right now? Why does it continue to lose money? And as an analyst, are you concerned that that business continues to lose a good bit of money?
Yeah, that's a good point. Certainly, that's a considerable factor for a lot of investors as well. I think a big component of the financial losses in other bets, I think right now is currently autonomous driving, Waymo, right? And the company has continued tested, autonomous driving services for ride hailing in a number of markets in the U.S. They indicate on the call they have tens of thousands of rides right now they're offering. And they are currently trying to improve technology, removing friction to adoption in order to get to a larger scale. Now, with the larger scale, with this economies of scale, that will help, number one, drive revenue for the services, and number two, get to profitability. So right now, Waymo is certainly a technology we're watching. It's very rare. Right? One of the few companies globally right now is actually reaching L5 level autonomous driving. That means you do not need assisted driver. So that innovation will be continue watching very closely by investors and going forward.
James, I'm curious how you're thinking about the YouTube part of the business, which they're now breaking out in results and giving us a sense. I mean, revenues or YouTube ad revenues up almost 100% year over year. Kind of where you see that part of the business fitting into the larger Alphabet story.
Yeah. Very good point. We see a lot more integration with their search campaign and YouTube campaigns right now. Because search campaign historically has been very good in terms of driving for e-commerce and driving conversion. Right now, they are leveraging their data on search and leveraging their advertiser on search on the e-commerce side to bring on YouTube to be able to drive conversion from video views specifically, especially leveraging their large influencer economy. It seems like they're having a lot of success. They are seeing quite a bit of pricing increase, from YouTube because their increased component of composition of performance marketing. And that's going to really help drive demand and also pricing leverage for YouTube business. We continue to be very positive. Right? Keep in mind, if you look at U.S. right now, TV advertising still make up a third of the business, a third of total advertising. And e-commerce right now, still only 20% of the total retail sales. So the opportunity for YouTube specifically is still very significant in our view.
Yeah, YouTube is just kind of amazing, the growth story that it's had. When you now have Alphabet and its ad sales, you had Snap last week and its numbers. What does this tell us about Facebook? Buckle up, it's going to be a big quarter for them as well.
Yeah, good point. I think the indications is very, very good for Facebook, right? Same thing as very similar to Google, right? Facebook is going after, a shift from offline advertising to online advertising. And where Facebook's having a lot of success recently, in some way very similar to Alphabet right now, is getting more and more e-commerce advertising on its platform. And it's very helpful for pricing specifically. We're going to see that as a main factor for earnings tonight. Another factor that's going to be doing very well for Facebook is small and medium-sized business transition from offline to online. During the pandemic, a lot of local businesses, right? Think about local grocery store, pizzeria, bakeries, they all need to pivot to online. And where Facebook has a very, very user-friendly turnkey solution where you can be online in an instance and also at the same time inform your customers that you offer delivery or pickup. From that perspective, I think they're gaining a lot of traction from small and medium-sized businesses. Another factor to pay attention to on Facebook is Apple's recent privacy setting change apparently is not having a lot of impact in online advertising specifically. So that's also going to be a positive factor for Facebook's earnings tonight.
James, so Facebook is letting its workers work remotely for the foreseeable future. Google talked a lot about on its call last night how it's out there buying more offices. I would suppose eventually more workers would come back to their offices. How important is it for big tech and the future of innovation that workers are back in offices and collaborating face-to-face?
Yeah, I think it's a factor they'll continue to be evaluating, right? And I think most of the big tech company right now is taking a hybrid approach, right? Where if there are certain project needs to be super collaborative, for example, maybe they will require you to come to your office. And for the rest of the time where the project can be divide and conquer, you still can enjoy a hybrid work environment. I think that's going to be certainly continue to be a testing environment going forward. I think at least talking to most of the big tech company, a hybrid work environment is the direction they're going in the future.
Feels that way. James Lee, thanks so much. Mizuho Securities Managing Director. Appreciate it.